figure be?
No, it's not a question. I mean, ideally, if you want me to do 3 gigawatt, I can. Will I do it? No, I will not do it. What we want to do is 50% turnkey, 50% equipment supply. That's the broad mix. Obviously, it could be 40-60 or 60-40. But just in terms of capability, I'll throw a number at you. Until 15, 16, 17, when the sector used to be Q4 dependent, and you have this thread of 31st March, on average, Inoxwind used to do 50 to 60 turbines every month in the last quarter, right? Now, whether it's a 2 megawatt or a 3 megawatt or a 4 megawatt turbine, is the same job. So you juxtapose that. 50 or 60 turbines is 100 to 120 megawatt. Multiply it into 3.3 megawatt, you will be anywhere from 180 to 200 megawatts a month. So from a capability perspective, we could do north of 2 gigawatts. Do we want to do it? No.
In terms of the profitability and the revenue aspect, can you differentiate how would a pure equipment supply order be and how would a turnkey project be?
I'm sorry, I missed your question.
Specifics.
I'm sorry, I lost you. Could you repeat?
So just trying to understand the revenue and the profitability profile between a turnkey project and a pure equipment supply.
Look, I'm not going to share those numbers because...
No, I don't want specifics. I don't want specifics. If you can just...
in terms of absolute profitability, turnkey gives you a little higher, obviously gives you higher because you're taking more headache and more risk, right? From a percentage point, it may be on par with equipment supply because your denominator is lower, right? But it's not a question of... you have to take some easy businesses and you have to take some turnkey businesses. So it's not a question of why don't we just do all turnkey? Because it's complicated. Yeah? You need to build lines, you need to acquire land, you need to solve ROW issues. It's not possible to just take all the dirt and leave them alive for our competitors. Hello?
Yes, sir. Thank you. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions. Next question comes from Akhilesh B, an individual investor. Please go ahead.
Yeah. Congratulations to the whole team. As a shareholder, I'm really happy to see all the positive developments around our company and our sharp focus on profitable growth, which will be really important going ahead. My question is around the merger with Inoxwind Energy Limited. In late December, we got approvals from the exchanges. So where does that process stand now? Have we filed the case in NCLT and any tentative timeline that we see for completion of the same?
Yes. So as we have stated through our press release in December, that we have already received the approval from both the exchanges, after which we have filed the case, our scheme in NCLT as well, at the Chandigarh bench. Now we await the listing of the hearing, and it may take time because, as you know, NCLT is a time-taking process. However, we don't have any guidance as of now, but what we expect that we should get it within the next 2 to 3 quarters.
Okay. Thank you.
Thank you. Next question comes from Abhishek Datta from Anand Rathi. Please go ahead.
Hello, sir. Congratulations on the great set of numbers and the great outlook. Sir, I just wanted to understand, you have manufacturing capacity of 2.5 gigawatt and you have a sizable order backlog, order book. So, can you just throw some light as to when do you expect this 1 gigawatt order execution in the near future?
It's very difficult to say any exact timeline, but we are definitely gearing up. As Devanshu said, we are building up the capacity, and capacity in the sense of, the order intakes and all that, and we will gradually over the quarter put the timeline in such a way that we can execute those.
Okay. So the second question is on when you say that you have one of the largest common infrastructure among the players. how do you quantify it? Like, is it part of our gross block that stands at around 2,000 crores? How much is the common infrastructure part?
So how we talk of the common infrastructure is the access to our project sites, transmission lines, land banks, substations. That's how we quantify that we are one of the largest project site inventories. And that's what enables us to get projects which can be done on a plug-and-play basis, as opposed to starting from scratch, which would be a 3 to 4 to 5 year process.
Okay, that's fine. But how much of that, how do you quantify it? Like, in terms of, you have spent money to create that asset pool. So, in the 2,000 crore gross block of 2000 FY23, how much that represents?
So in terms of the, the investment which we have made in common infrastructure is broadly in the range of 400 or 500 crore rupees, which is lying in our CWIP or the fixed asset block.
So is it the same like other financial assets, non-current financial assets of 470 crores, which is there? Is what you are referring to, the common infrastructure part, or the unbilled revenue?
Lies in our books of accounts and give the right to use to our customers, and will apportion over a period of time. The other non-current financial assets which you are seeing is towards the unbilled revenue, towards the O&M business. As per the accounting rules, we need to straight line our O&M contract over a period of time, and the initial 2 years of free O&M period is shown as unbilled revenue.
Just tell me where are the fixed assets?
Fixed assets
Capitalized
in our fixed asset block in PPE. PP.
Can you just explain that part, like, of the 1,300 crore gross block of Inox Green, how much is, how do you buy?
No, this is not a question on Inox Green. Could I suggest you get off on a separate call and they can explain it to you, because there is straight lining revenue and there is also fixed assets, where the gross block, part of it is in Inox Green and part of it is in Resco.
Okay. And so, total promoter,
Sorry to interrupt you,
promoter infusion.
Abhishek sir, could you please
Just
join
one,
back the queue?
yeah. Just
Okay, go ahead.
one question. Of the total promoter infusion, or after total promoter infusion, what is the level of interest-bearing debt right now?
The interest-bearing debt as of 31st December would be about 500, 400, 450 odd crores would be the interest-bearing debt in the company.
Okay, sir. Thank you so much. And that's it.
To get on, we can explain those.
Sure. Okay. Yeah, so we'll explain all those queries offline.
Yes.
Yeah.
Thank you, sir. I request the participants to restrict with one question in the initial round and join back the queue for more questions. Next question comes from Divakar Rana from Prudent Equity. Please go ahead.
Yeah, good evening, sir. Basically all my question has been answered. Just one question: what will be the normalized interest cost from the Q4 onwards?
Look, I think when you look at these numbers, our fundraising happened in middle of November when we got the proceeds and we started using them. All our one-time charges are coming down. Banks are going off the cost. But I think on a rolling basis, we are on a 30 crore odd run rate at this point in time.
30 odd.
30 odd crores. Rahul?
Yeah, so we will be on the run rate of 30 to 35 in Q4 probably, and another 30 crore. This amount which has been infused by the promoter. This was done in November, and the effect of this has come into December. So probably from Q4 we'll be able to see the 30 crore run rate.
Excluding the one-time charges, given that a lot of NCDs are being repaid, debts are being repaid, and those have charges because we are breaking them from the 3-year, 4-year, 5-year terms which we had taken from the bankers.
Yeah. Okay, sir. That's all from my side.
Thank you.
Thank you. Next question comes from Darshit Shah from Nirvana Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity. So just would like to know, out of this total order book of 2.6 gigawatt, roughly how much would be for the new 3 megawatt turbines?
Kailash, I think this would be what, 2 megawatts?
I think very few 2 megawatt orders are left. I think we are talking about.
What about 300?
Around 350 megawatts.
About 350 megawatts out of this is all 3 megawatts.
Sorry, sir, I couldn't hear you properly.
About 350 odd megawatts is 2 megawatt. Everything else is 3.3 megawatt turbines.
Okay. And sir, as you know, we had seen on earlier calls, so this 3 megawatt turbines fetch more compared to the earlier technology?
Look, our earlier technology was outdated. When the sector shut down, we had a lot of inventory, etc., etc. So we've not upgraded our turbines. Because till you don't sell the old inventory or clean up the old inventory, how are you going to move to larger turbines? And from that perspective, yes, the 3 megawatt are sold at a higher price, but then they are much larger rotor. They are much higher in terms of tower height. What is important is cost of energy, not capex. And the 3.3 megawatt platform reduces the cost of energy compared to our earlier 2 megawatt turbine by virtually 35 to 40%.
Thank you, sir. Next question comes from Yashvardhan Sardar from SKP Securities. Please go ahead.
Hi, sir. Congratulations on a great set of numbers. Could you please tell me a little more clarity on the Inox Green merger and what the timeline is like?
No, it's not Inox Green. It's Inoxwind Energy Limited, which is the promoter of Inoxwind, getting reverse merge. And in one of the previous questions, I answered that we have already filed the scheme in NCLT. And however, we can't tell you the exact timelines, but what we expect is that within the next 2 to 3 quarters, we should get the approval from the NCLT.
Sure, sir. Thank you so much.
Thank you. Next question comes from Bharani Vijay from Aventus. Please go ahead.
Yeah. Good evening, gentlemen. Am I audible?
Yes.
Yeah. So I just want to understand working capital, how it works for your equipment business and your turnkey business. So how much of inventory typically would be kept, and what will be the time before the client pays, etc. That kind of details for, say, separately turnkey business and equipment business. Thank you.
Look, I think very simply put, the past will not be a barometer of the future given that the sector shut down, but in a normalized scenario, say FY25, which will be the first full year of normalized operations and all the debt issues out and 3 megawatt kicking in and the sectoral feed-in tariff issues behind us. What we would be guiding for is about 90 days of working capital cycle. When you typically supply a turbine, as Manish and Kailash may have explained or Rahul may have explained, when you supply a turbine and equipment supply, we supply the turbine, the risk reward gets passed and we get paid. That would typically be in 45 to 60 days. And in a turnkey contract, obviously again, when you supply the turbine, you get paid the supply price. But the EPC piece, which is about 25% of the turbine cost also, you get paid in different milestones. So that depends on what the contract are. But that typically comes over a period of 1 year.
So to summarize,
but 90 days is a good barometer in terms of working capital cycle guidance for the consolidated business.
So it will be higher for EPC business and it will be lower for equipment business. 90 is the...
Not necessarily. Again, like I said, your supply payments come in. It's the smaller part which comes in different milestones. And those milestones are, say, over 12 months because you supply turbines, you're doing foundations, you're erecting, you get paid something on foundation, you get paid something on erection, you get paid something on USS, something on charging of the line, something on final commissioning, something on STPT. So it's a process. So that could be for 3%, which may come after 3 months, or 4%, which may come after 5 months. But broadly, as I said, it's very hard to say, will this be 81 days and will this be 96 days? As I said, broadly 90 days is a good barometer for the consolidated business.
So what will be the shortest time within which you can supply equipment and shortest time within which you can execute a turnkey project?
Look, if I'm in love with you, I can supply a turbine to you tomorrow and probably commission it for you in 30 days. But let's look at it practically. I think inventories are more or less consumed now. We are now building on inventories because the 2 megawatt is out and you are now ramping up your 3 megawatt supplies. So we have a lot of orders which we've taken. Kailash, I think you have different timelines. Now, frankly, if we were to accept an order today, it would be for FY26. We would not be supplying any incremental turbines, giving such a large order book for FY25.
Sure. Okay.
Dear
Maybe I will.
please stay connected while we connect the management team back on the call. I welcome back the management team. Please go ahead, sir.
Can you please ask the participant to repeat his question?
Yes, sure. Barney, sir, your line unmuted. Please go ahead, sir.
Oh, I thought my session got over. Anyway, so no, that answered my question. Just that you are telling if you take an order now, you will be able to supply equipment only for 2026, right?
That's right, because we have a very large order book at this point in time. I mean, of course, Kailash, you can throw more light.
I think as I was telling that time when call got disconnected, I think most of the timelines have gone up. I think in past we used to execute in 3 months, 6 months, those kind of timelines. But today most of the large customer, and if you see we have all, I would say, what you can call top shots, or the very, very sophisticated marquee customers, big ones. So they typically, all of them plan project execution anywhere from 12 to 15 to 18 months. So if I am talking today for you and turbine supply, mostly I talk to you not this financial year or not even coming, maybe most probably in the financial year after. So it will be most probably 25, 26 or so.
Okay. And it will be same for turnkey project also, meaning you will commit to execute a project by turnkey only by 26.
In fact, yes, equipment supply could even be faster, but turnkey will definitely take longer time. For sure, we'll plan accordingly.
Great. Thank you, gentlemen. All the best. We'll hope to talk to you in future. Bye.
Thank you.
Thank you. Next question comes from Kant Garg from Garg Advisors. Please go ahead.
Yeah, hi, good evening, sir. So firstly, I would like to thank for all the steps that you have taken to make Inoxwind's balance sheet such great. I think you have given a 0% interest loan. I think in the last 15 years I've been investing, I've never found any management doing that. So I thought I should congratulate you for doing all the good things for the shareholders. So I just have one question. So my question is, if I look at the order book of, let's say, Suzlon, I mean, the largest competitor and yourself, right? What I see is that there is no capacity for both the companies to supply wind turbines for, let's say, FY25, right? Now my question is, given that so many orders are coming from the government, do we see any changes in the pricing of the turbines, or do we see, is there any possibility of expansion of margins, let's say, when we onboard or take new contracts?
Look, I think we've already taken a very, very significant number of orders for FY25. If you look at our firm order book, excluding LOIs, it's now north of 2,500 megawatts. And there are certain other commitments which we have, which are in different stages of, advanced stages of closure, of which we bid for. So, from that perspective, I don't think, and I think Kailash mentioned, I don't think the team is planning to take any turnkey orders whatsoever for 25. For 26 also a very limited chunk, I think. I don't know, Kailash you would know better. I mean, are we taking more for 26 turnkey?
Not for the next financial year, only year after, and that too very limited.
Yeah, I think limited, and I think it's more on the equipment supply side. Yes, we have the potential. Of course, we have the manufacturing capacity, so we could. But I think we're choosing our customers selectively. As I mentioned in 2 of my earlier conference calls, what's important is ease of doing business as well, and the customer intent to pay. There is no point taking orders with people who just come up today or put a motley group of 3-4 people and they believe they can execute. We are very selective and focused on the guys from whom we are taking equipment supply. And to that extent, I think, as we said, we ourselves anticipate gigawatt scale execution much faster, but we are gearing up to be a 2 gigawatt supplier to the Indian market. That's all that we can say at this point in time.
Thank you. Next question comes from Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. Congratulations for very good set of numbers, and thanks for the opportunity. So what is the timeline for execution of this CESC order?
So this is a binding agreement which we've entered into, which is spread over 3 to 4 years.
Spread over 3 to 4 years. And sir, when are we going to launch this new 4 megawatt turbine? And what will be energy saving of that turbine over 3 megawatt?
Yeah. To be honest, we are right now focusing on 3 megawatt. 4 megawatt is basically for the future. This is what we are planning, and I think in one of the comment, Devansh explained that it's a process which we'll go through. We'll do the detailed, prototype, go for RLMM testing and all that. So possibly it will take another, 2 to 3 years before it becomes commercially available.
Thank you. Next question comes from Pratik Kapoor, an individual investor. Please go ahead.
My question has been answered.
Okay, sir. Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. We have a follow-up question from Rahul Kothari from Gript Equities. Please go ahead. I repeat, question comes from Rahul Kothari. Please go ahead.
Sir, with the demand of the wind industry expanding multifold, how is the availability of the cranes coping up, since the 3 megawatt cranes are turbines are new and require different set of cranes? And secondly, for the equipment supply industry to grow, there should be, I understand there should be external BOP players. So can you shed some light on whether the Indian industry, there are players who are providing the BOP services for the same?
Yeah, first and foremost on the cranes, there is no shortage of cranes. I mean, if you don't plan and suddenly ask for a crane, you won't get it. I think from our organization perspective, there is no challenge. We've anticipated what we need. We've got all of them in place. And for our future, we'll tie it up well in course as and when we need it. I can't comment about others. Secondly, with respect to other BOP service providers, there are a few small guys, let's put it like that, unorganized or maybe 1 or 2 organized players who are doing this. They have the ability to give 200, 300, 400 megawatts in a year, not beyond that. And in a certain state. They're not pan-India players. So I think, as I would say, execution, turnkey is something which we believe is a very, very strong USP, a very strong moat at Inox. And we will leverage it to the hilt. I can't comment with respect to other players in the market, the large IPPs. Some of the very large IPPs have the capability to do it. They are doing it to some extent. Some of them have failed to do it because that's not their core competence. But yes, there is a significant shortage of quality BOP service providers in the market.
Just to add that we have a good partnership of many of our crane suppliers and BOP service providers. So typically they know in advance how we are building up, what sites are coming up, where we are executing. So this shouldn't become a concern at all from that point of view. The gear up accordingly.
Okay. Thank you, sir.
Thank you. Next question comes from Chirag from Katamaran. Please go ahead.
So thank you for the opportunity and congratulations on a good set of numbers. Just a couple of bookkeeping questions. Can you share the execution megawatt number for the quarter? Also the closing net debt, the interest-bearing net debt, if you can.
So the execution was over 100 megawatt this quarter, precisely around 104 megawatts. And the net, as we had informed in an earlier question, is around 450 to 500 crores. This is the net interest-bearing debt, which is there now.
Yeah. Look, I mean, don't get colored by the current interest because there's a lot, the money came in November, and also a lot of the prepayments are happening. These were NCDs, long-term debt. So it's a bilateral negotiation. These weren't CCs or loans which we could repay. So there are exceptional charges which are coming in the one-time cost. So the interest cost of 60 is not the cost at which we are. We are potentially today at about 30 crores, which we expect to virtually become zero over the next 2 odd quarters.
Right. And there will be bank guarantee charges which will be around 50 odd crores annually, right? If I understand it.
So that's part of this whole thing, right? That's why I said if you're going to be roughly on 30 crores, that includes the interest-bearing debt, that includes your one-time bank charges, LC charges, BC charges, and BG charges. What we anticipate is over the next 2 quarters, potentially earlier, but over the 2 quarters, we are net debt free, right? And a lot of the bank charges are going to further come down as we are moving forward. given the strengthened operations and the profitability profile which bankers are seeing as we move forward.
Right. Now, what I was trying to address is 2 or 3 quarters down the line, when the entire debt, sort of interest-bearing debt, gets paid down, there'll be a 50 odd crores of annual bank guarantee charges, right? That's the broad number we should work with.
The annual bank guarantee charges would be close to 10 crores per annum.
Oh, okay. Okay. Got it. Thank you so much.
Thank you. That would be the last question for the day. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doot Sabha's conference call service. You may disconnect your lines now. Thank you and have a good day.